Hello everyone and welcome to my channel. If this is your first time tuning in, thank you and I hope you enjoy the video. If you're a subscriber, well, I thank you too and welcome back. Anyways guys, today let's talk about L Brands because they took an absolute gigantic L today. Oh man, so today is Thursday, July 12th and L Brands went down big. I'm talking big time. Like, they went down $4.43, which is about 12%, just over 12%. So as of right now, L Brands sits at a pretty crazy price of $32.34. They currently have a PE of somewhere around about a 10.9, and they do pay a pretty crazy dividends right now that is sitting at about a 7.42%. Just kind of a quick rundown of L Brands. Now if you don't know what L Brands is, I will explain what they are to you. So L Brands Inc., formerly known as Limited Brands, operates as a specialty retailer of women's intimate and other apparel, beauty and personal care products, home fragrance products, and accessories. The company operates in three segments: Victoria's Secret, Bath & Body Works, and Victoria's Secret and Bath & Body Works International. Its products include lingerie, bras, panties, athletic wear, shower gels, and lotions, aromatherapy, body care, soaps and sanitizers, handbags, jewelry, and personal care accessories. The company offers its products under the Victoria's Secret, Pink, Bath & Body Works, Lascenza, Henry Bendel, C.O. Bigelow, White Barn, and other names. L Brands Inc. sells its merchandise through company-owned specialty retail stores, which are primarily mall-based, though its websites comprising victoriassecret.com, bathandbodyworks.com, henrybendel.com, and lascenza.com, and through franchises, licenses, and wholesale partners. As of March 8, 2018, the company operated 3,071 stores, company-owned specialty stores in the United States, Canada, the United Kingdom, Ireland, and Greater China, as well as sold its brands through approximately 800 franchise locations worldwide. The company was formerly known as Limited Brands Inc. and changed its name to L Brands Inc. in March 2013. L Brands Inc. was founded in 1963 and is headquartered in Columbus, Ohio. That's basically the rundown of what this company is. So, again, the company was founded in 1963 by a pretty fantastic guy named Les Wexner. He's a pretty great CEO. I don't know too much about him, but from what I searched up, he seems like a pretty good CEO, and I like him. He gets my seal of approval. So, why did this stock go down 12% today? Mainly because of June comp sales. I don't want to go too much into them, but basically Victoria's Secret is lagging pretty hard. I'll pop it up on the screen and you can see what I'm talking about. Victoria's Secret is not doing great. Bath & Body Works is doing pretty phenomenal. That's pretty much the gist of why the stock is down. However, I don't really want to talk about that stuff. I want to talk about, is the stock a good buy? And that's what we're going to talk about. Is it a good buy? Is it a sell? Okay, so let's start to get into this. Now, I did some research on the stores and their competition. I personally do not shop at these stores. I don't know if you noticed, but I'm not a girl and I don't wear any bras or panties. That you know of, and I don't. Believe me guys, I don't. But I do have a girlfriend who goes to these stores. I asked her opinion on these stores, and sometimes I am unfortunately dragged to these stores, which is fairly boring. I'm not a big fan. So, let's talk about these stores. Now, they do own the stores I just mentioned, and Victoria's Secret has been lagging. They basically have a semi-annual sale that they do twice a year for 1 week. And they recently just did it, and they did it for an extra week because their comp sales were lacking and they lowered their prices. But that really hurts their profit margins because, well, they're selling things for less, and their brand's supposed to be a high-end brand. It's Victoria's Secret. They're supposed to be expensive. They're kind of like Starbucks. Starbucks is expensive. You pay a premium for the Starbucks brand. That's kind of how Victoria's Secret is operated. However, when people are not wanting to pay the premium for your product, when you're the premium product, you have a problem with your product or your brand, depending. Now, what about, say, their competition? Because they do have quite a bit of competition. Some of their bigger competition is turning into American Eagle, which has their brand Aerie. We have no real Aerie American Eagle brands here in Canada. However, in the US, they're pretty popular. We kind of have them here, but not super popular. But anyways, we do have all the other competition stores that I'm about to name, such as Lush, which is pretty popular here and is a direct competitor with Bath and Body Works. And Lush has over 900 stores in 49 countries. Not too shabby. Not to mention the Body Shop, which is owned by Natura & Co. Natura & Co. is very famous in Brazil, where they were founded, and not to mention other places. L'Oreal sold Bath & Body Works to them in 2017. Bath & Body Works does own quite a bit of stores, and Natura, who owns Bath & Body Works, in total, because they are like L brands and they own many different companies, they own 3,200 stores in 70 countries. Quite a bit. L Brands is in about 80 countries. Not too shabby. Not to mention Sephora. Sephora is a company that makes makeup, and they're pretty popular, and I think they're gaining in popularity pretty quickly. They have about 2,300 stores, which is pretty crazy when you think about it. It's just makeup and bodies, ointments and stuff, and hair care products and whatever else they sell. I don't even know. I sometimes get dragged into that store too, and I hate it. But hey, it is what it is. And they're in 33 countries. So that's kind of their competition. The problem I see with this stock is an even bigger problem than their competition. Yes, their competition is kind of scary when you think about it, because they have a lot of competition and they're fairly big competitors who are well-known brands and whatnot. But a scary thing about this company is a few things. One, their dividends is 7.42%. Pretty crazy. And that payout ratio is 86%. Youch. That is freaking painful, man. 86% of your money is going to your dividends. Man, I don't know about you, but I think they need to cut that dividends. However, if they do that, I feel like a lot of people are getting into this stock, well, for the dividends. How many companies out there have a 7.42% dividends? Not that many, guys. And honestly, normally when you get to a dividend yield that high, it's because your company is probably failing or something really sketchy is happening. It's normally not good when it's that high and your payout ratio is 86%. That's not a good payout ratio, guys. That is extremely high. They have to cut this dividends, or their stock has to go up a lot and they need to make more money. One or the other, they really got to do. And checking their balance sheet, I check their earnings and whatnot. The main thing, there's two things I want to talk about. I want to talk about their quarterly revenues and earnings, and I want to talk about their total assets and whatnot. So after you count how much money they make, how much assets they have, and all their liabilities, you get a total number. And the total number I really do not like. So when I checked annually for February 3rd, 2018, they were minus $2,512,000,000. That's not good. Then when I checked quarterly, which this was reported May 5th, 2018, they were minus $2,730,000,000. So in the span of 3 months, they added over $200 million to their total liabilities. Now, this is after you count, again, all their assets and the amount of cash they have. That's kind of scary, because if this company were to go bankrupt, well, they would still owe over $2 billion. Not a great thing. You normally want a company that if they go bankrupt, they at least have some money to give back to their shareholders who took the grunt of the losses. This company, if it goes belly up, cannot do that. They'll basically say, you're screwed and we're sorry. Not a great thing, guys. So let's talk about their quarterly earnings. In Q3, they reported revenue of $2.76 billion. However, their earnings were only $139 million. In Q4, they reported revenues of $2.62 billion, and they made $86 million in earnings. Pretty low number. And in Q1, obviously the Christmas quarter, they did really well, and they did $4.82 billion in revenue, and they profited $664 million in earnings. Definitely a lot better. However, in Q2, things take a pretty big dive. They only did $2.63 billion in revenue and only made $48 million in earnings. Not really a big fan of that number, guys. Like $48 million in earnings. I really don't like that number at all. I'm starting to think this company could have some serious issues. Thing I want to tell you guys about is there's a fairly big mall where I'm from in Toronto, Canada. It's called Yorkdale. The reason I picked this mall was because I've been there many times, and this mall has every single one of their stores. Not Henry, but they got all the other main stores, plus they have all of their competition stores. So just for fun, I decided to search up all of them just to see what their reviews are, just to know maybe, Victoria's Secret is lagging in a couple things, but maybe their customer service is really high. So I thought, why not get an estimate by searching up a mall that has all the stores and seeing how they compare to each other. I read a couple reviews here and there. I'm not going to say any of them, but I just want to kind of give the numbers. So, when I originally searched up Victoria's Secret, it had a 3.2 star with 21 reviews. Bath & Body Works had a 4-star review with 60 reviews. Pink had a 4.2 with 12 reviews, and La Shenza had a 2.7 star review with 14 reviews. Now, their competition, which is American Eagle, had 4.3 stars, and that had 43 reviews. Lush had 4.7 with 24 reviews. The Body Shop had a 4.1 with only 7 reviews. And Sephora had a 2.2 with 97 reviews. That's kind of their competition and how they stacked up against them review-wise. It's pretty much what I want to talk about with this stock. I don't think there's really anything else I want to add. I just wanted to add that, they do have a lot of competition. Yes, their stock is taking a complete and utter beating, and this has happened just a couple months ago. Just a couple months ago in May, their stock went to around the $32 mark and bounced up to $38 soon after. And again, the stock is now down to right around $32.34. So it might bounce back up to $38, depending. We'll have to wait and see officially. Probably looking somewhat good for that, I would say. I know Jeremy from the Financial Education channel is a huge supporter of this stock, is one of his bigger holdings, and he is a big bull for this stock. I respect him a lot, and I think he's a very smart investor. However, I don't know if this is the greatest stock choice. He did say his buy-in price was around 32 and 35 on some accounts. Pretty low buy-in price. At least he didn't buy in a lot higher. So yeah, it's kind of hard to say if this is a good buy just yet. I honestly feel like this stock will probably come more down because they have to cut their dividends, in my opinion. I think they absolutely have to cut it or something. They have to change something up. I don't really care about their comp sales. Again, I don't really care about that stuff when I look at a company. If its comp sales are down, this and that, I don't really care. As long as they're making more money, I don't really care about, some months are slower than others, whatnot, maybe this, maybe that. I don't really care. I don't follow it that much. 1 month doesn't break make or break a stock or company or anything like that. So I wouldn't, worry too much about the same store comp sales. I don't think they really matter that much. Like, I feel like a lot of people are putting a lot of emphasis on this, and this is why the stock is down. I think the stock should be down for other reasons, like they're kind of, not doing that great in other aspects of their company. Like, I think they should be focused on maybe growing their brand and using a more positive image. I know, like, American Eagle was kind of doing a complete opposite and using real people for their ads. Who knows? Maybe they were, maybe they weren't, but Victoria's Secret models who are highly airbrushed and kind of post-seductive, where American Eagle's brand was kind of just more fun at the beach kind of style and a lot cheaper. Now, Victoria's Secret can obviously charge a premium like Starbucks does. However, they have to live up to their premium and be a solid brand, a premium brand over American Eagle, which is considered a more cheap brand. This is why Walmart clothes are a lot cheaper than Gucci clothes, right? Premium brand, premium quality type thing. So that's pretty much that. Overall, should you buy this stock? This is a hard one because I feel like it is a good buy, to be honest with you. I think it's a fairly good price for this stock. However, I think they have to cut the dividends. So I feel like this stock will tumble a little bit further. This stock has been beaten up very badly in the past few years. It was in the high 90s and now it's at $32, so it's lost like 66% of its value or so. Not great for a stock. I do think this stock will go up over time. However, I wouldn't be rushing to get into the stock. I see this stock in a few years, bouncing back to maybe the $50 mark if they get their stuff together. But in the short term, I don't know if I'm a buyer of this stock, really. If you have the stock, I would hold it. If you don't have the stock, I would maybe wait a little bit, see how it trades here and there, maybe make a position, maybe around this mark, maybe a little bit lower if you can get it. I don't think it's that bad of a price, to be honest. I really don't like that they're minus overall, like $2.7 billion, and that number looks like it's continuing to grow. That is kind of a scary thought. Other than that, the company seems okay. I wouldn't want to buy the stock kind of for that reason too, because it's a big reason, guys. Like, your total company value is minus. I don't like to buy companies that are they're profitable, but overall they're in the negative. I don't like companies that are in the red. I like to, put my money in a company that is in the green and continues to stay in the green and adds to their cash, not continue to go down. So that's a scary thought. It's one of my main rules in investing is do not pick a company that is losing money. It's like my number one no. If a company is losing money, I put it into my pile and move on. And this may be what you should do with this stock. However, it is kind of cheap, so I don't know if I would hate on it that much. But again, if they cut that dividends, I don't see this stock sticking at this price. It's got to come down. So maybe a short term, $30, $29, $28. Long term, maybe in a few years. If you're buying long term, it's fine, because I believe in 5 years the stock will probably be $50, $60 easily. But in the short term, I think L Brands is going to be in for more L's. Anyways, guys, hope you enjoyed this video. If you did, please do give it a thumbs up. That would be so greatly appreciated. And since you gave it a like, maybe you want to smash that subscribe button. That would be so damn cool. I wouldn't even know how to thank you. I would not give you an L. I would definitely give you a straight up W. Because you, the MVP. Anyways, guys, until next time, see you later. Oh, and by the way, comment down below your thoughts and theories on this stock and what you thought about this video and L Brand stock. And let me know if you want me to review a video. I will definitely check it out. And until next time, guys, see you later and have a great day.